Greetings, everybody. It's Jeff Scott. It's not yet 8:26. It's still 8:25, about 10 p.m. But if you're in the East Coast, it's 8:26 because it means it's past midnight. I just spent an incredible week on the road. Went to Santa Fe with my lovely wife Sunday, Monday, Tuesday, and Wednesday. And then we flew to Jackson Hole, Wyoming. Of course, not direct. Thursday, and been here at an incredible wedding with Hirschman Marshall families, and going back to PBI tomorrow, so looking forward to it. What a beautiful part of the country Jackson Hole is. And no, for those, somebody commented on Facebook, I wasn't here for the economic summit. They don't care what I think. But I am pleased that you guys do and that you come here. So actually, I'm going to start this with a little advertisement and a request. So those of you who've been around, I've been doing this for probably a decade. And I love doing them. And every time I tell you I'm not going to do them anymore, I get bored and I end up doing them. I need you to do me a favor. I need you to go to wherever, here's my subscriptions, you have me at, all right? And I need you to, I'm just going to go to my own channel, so at least when I open one up, it's one of mine. I want you to open it up, and I need you to do me a favor. Let me make this, I need you to like my emails, like my YouTube video. I'd like to see if I can get my likes up and see if I can't grow the number of people that come by. Just liking it would be something great. It gives me great feedback, makes me feel good, and also helps me to get other people exposed to it. There's the end of the advertisement. As folks know, I spend a lot of time on what I think the market's going to do, and I do a lot of it via PowerPoint because that way I don't have to open up as many programs. So I spend more time maybe than others, but I promise we'll look at some charts at the end. Markets climb wall worry to new highs. Sessions for education purposes only. Any stocks I recommend in the spirit of education, not investment advice. I am a doctor, not a broker. Independent. I'm not affiliated with any software companies. Anything I say is my feelings alone. No one pays me for the tools or pays for the tools I use. I've bought them all myself. And trading involves risk, and you alone are solely responsible. Since I may talk about options tonight, I do want to emphasize that options are considered very risky, and I refer you to the Options Industry Council guidebook and website. They can review the risk before you make any trades using options. I like to refer to my trading style as be your own guru, and I rather teach you how to become your own guru rather than you mimic me. And I learned that from the man up in the upper left-hand corner, Ian Woodward. Ian was a disciple of O'Neill. Through Ian, I met Gil Morales and Chris Catcher, who were O'Neill money managers who went on their own. Ron Brown, who moved from the audience as one of the students of Ian to Ian's partnership with Ian Woodward Brown Investments. What a great time they must have had together. Every time I spent with Ian, it was just great. George Lee, just to call out that the weekend after the Las Vegas Traders Expo. Let me give you the exact dates here because I promised some people I would. It looks like it would be November 16, 17, and 18. Is going to be a George Lee and Jeff Scott meeting in the West Coast, and stay tuned for more information. When I find out the particulars, I will present them here. This is John Person. John's a great trader. I'll be sharing the podium with him, at least for a couple days at the end of November in Palm Beach Gardens at his annual November-December meeting. John's a friend, but before he was a friend, he was a software developer. I bought his package a decade ago. I read his books. I've been to his mentoring. Just a great trader, great friend, but also just a great guy to learn from. And then Van Tharp for money management, position sizing, and Sager, Donnie from Superior Profit, is very active on our Discord site. Sager has some unique indicators and some software programs around industry rotation, and I have incorporated much of what he does in my daily trading. Now, I have a lot of different programs. A lot of what I do when I talk about John Person stuff and cigar stuff, those are add-ons to TradeStation or Thinkorswim, etc. So I need I need probably both TradeStation or Thinkorswim. I like Genesis, but probably more for futures. HGSI and EdgeRater are pretty much all I need for analytics, although I do like to supplement them with my favorite seasonality programs and websites. Speaking of websites, as always, just calling out highgrowstock.com. You hit free 30-day trial. You can get 30 days of this without giving up your credit card. If you do this and you want some basic intro videos, there are many on the site from Ron Brown. I've also got some that are a little bit older, and also one that goes over the vocabulary of what we use. Just email me at hgsidoc@gmail.com. The other thing important here is under investing strategies, there'll be hundreds of videos from Ron and I over the last decade of how to use the program. Broken record time, stock patterns are cyclical. Every stock, every index, every industry group over any time period will demonstrate this pattern. Sometimes it's easy. You've been in a long base, you get a buy signal, and you get a long buying opportunity. That's not been this market. This market has been one where you've almost truncated at the top and you're still going up, but every time it looks like you're rolling over, you get another leg up, and every time it looks like you're going to break out, you're going to pull back. So it's almost a Darvas box with an upward trajectory. This is not an easy market to trade, especially with the ferocious industry group rotation, and even over the past week, watching the shift from big stocks to little stocks as we went into the end of the week with the NASDAQ outperforming on Friday. So this has been a tough market. Therefore, when I'm up here, I do raise cash, maybe smaller positions, sell premium that's out of the money. But frankly, since we get mini bull runs and mini bear pullbacks, I'm doing everything on this page. And I've been very aggressive to the long side. And then I took a little heat on it this week, but I do like to carry a little bit of SPY protection just in case the market takes a dump. I really want to protect the profits that I have this year to date. And when I was traveling on Thursday, I actually bought some SPY puts, which didn't really work in my favor. That's good, because I did a big, not big, but a significant ANET position using the Jeffrey synthetic. And, 2 hours after I did the trade, announced that they're going to NYSE, and that paid for that was a big trade. I'll actually show it at some point what I did. So Friday, mixed day. I mean, the indices were much higher and then pulled back. You can see where the futures closed. Dow up 136, NASDAQ up 72. It was higher earlier in the day. If you look here, you see pockets of red. You see regional banks were weak. You see strength. Broker-dealers were strong. Insurers were strong. Credit cards fairly strong. You see over here biotech mixed at best. The big cap biotech have been lagging. There's been some small ones that make little runs. And up here you could see that transport, specifically airlines, were weak. So even though it was a strong day, it wasn't strong for everybody. Let's go into TradeStation for a minute. Thinkorswim and TradeStation. And here's a slide I just showed you, and this is something that John gave out to folks that had purchased his stuff. And I've got to update it, but it basically breaks down the sector ETFs into some of their bigger components, and it just gives you an idea of what sectors are working or not by looking at intraday at any time. Green is up, red is down, of what's moving and what's not moving. All right, let's go into the TradeStation. Stay in TradeStation for a second. Now we'll go to Thinkorswim. Sorry for the confusion. And let me start with the cash markets. So the cash markets are the markets that we play in from 9:30 to 4 o'clock. They are very close to the future markets, but they're not exact because, how many days do you see the futures down 200 points and it opens flat? Well, the future still prints that 200 down while the cash market does not. So what I want to point out here is the S&P 500 on the cash market has finally hit a new high for the year, just taking out the highs from January. NASDAQ closed at a new high for the year. It's had a successive series of new highs, and almost looks like it's breaking out here. We'll see how high it could go. A new buy came in last week on the S&P 500, person buy. A new one came in on Wednesday on the NASDAQ. The Dow still has not taken out its highs of the year. It's had periods of leadership, but it certainly looks like it may have been breaking out here, and we'll see what happens. Pulled back some on Friday, but it has not taken out its high of the year. The Russell 2000, using the IWM, a new high of the year set on Friday, and we'll talk more about the VIX and the dollar in a second. So that was the cash markets, the indexes that we see, but I also do some futures, so I follow them fairly routinely, and I guess it moves to the front there. All right, now I just got to figure out where that's what I'm looking for went to. I thought I closed it, didn't I? All right, I know how to fix that. Go right here. So if I just look at the futures, and then I'm going to open them up and make them larger and easier to see. Last week, I think I talked about, and I'll show you that with 1, 2, 3, 4, 5, that this bar here pulled back to the 17 with a new buy signal on the E-mini. Looked like it could be a launch pad or a taking off point. And we had a strong week here on the E-minis, closing at a high on the year, which is never a bearish thing in my mind. Here is the NASDAQ futures. They hit their high of the year back in July. I believe that's their high compared to right. They took out their highs of the year back here in July, had a new buy signal, move off the 17 on the futures as well as the cash markets, the YM, little flag, and then on Friday a move up. IWM breaking out new high, at least on the chart here. Let's look at the whole year. Here you have the whole year and clearly a new high on the Russell. So very strong markets, surprisingly strong markets. The VIX pulled back into chop, nothing else to say. And the dollar, and this I think is a big driver of why some of the markets did well this week, the dollar pulled back. Now it bounced off of its 50-day moving average, but the dollar did pull back from 96.984, closing at 95.164. This is probably a critical area here at $95. I think the falling dollar supported the market and also helped the interest rates to come down this past week. If I look at weekly charts, and both of those things will probably end up helping the market more than they would hurting. So on the weekly charts, what do I want to point out here? Lower left, upper right across the board, they all look healthy. VIX looks weak. And notice the dollar, which has struggled against this 200 weekly moving average, has fallen below it. So again, that could be a positive for a lot of the markets. Back to the PowerPoint presentation. Some things I feel PowerPoint's fine. I can do better, I think, looking at the programs. And then I do like Genesis. And the point of this one is I've got column of E-minis, NASDAQ, Russell futures, NYSE and Dow futures, daily on the top, weekly in the middle, monthly on the bottom, is to show you that pretty much all of them on a daily have turned around. They're all in buy signals. On the weekly, all of a sudden, what was choppy seems to be flattening out nicely. And on the monthly, we've got long-term up moves here. You know that you're making money on the long side. Just not as easy as maybe it should be. Here's the 10-year rates on the left, the 30-year rates on the right, and you can see the rates came down this week. So falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. For the most part, these look strong, although home builders were not as strong as the others. AD lines in yellow, you have the spiders, and in white, you have the AD line on the left of the Russell 2000, on the right, Russell 1000, and you can see new highs and reaching higher and higher every day on both of these on the new high, new low. If I look at the NYSE new high, advanced decliner rather, this is advanced decliner, not new high, new low, that's coming. NYSE advanced decliner, and all the major index ETFs turning up, even TLT. If you look at breadth, number of stocks above the 200-day SMA or above the 40 continue to creep up, but are certainly not at the highest that it gets. And interestingly, the 3-month new high, new low actually pulled back some this week. So although we're in the upper part of the scale of this very short term, but for me, accurate indicator of potential reversal, we've actually eased. The McClellan continues higher highs with both the summation index and oscillator turning high. Same here on the weekly. You'll have divergences, though, if they don't take out some of these prior high numbers. We'll be watching for that. Now, these are some edge rater slides. And basically, for this set here, I took the S&P 1500, made an index of that. And you can see I created that sometime in July. I then run that index through this edge rater template, which takes all the stocks and say how many are above their Bollinger Band midline in the S&P 1500 versus below, and then take below the Bollinger Bands, the 10 deciles, 10%, 20, 30, 40, and then those above. It gives you a sense of how extended the market is. So 71% bullish is bullish, or 71% above the midline is bullish. Only 6% above the upper Bollinger Band tells me this market could go higher before it's so stretched it has to pull back. Hindenburg omens are things that we look for that give us a warning of perhaps a bad event coming. There's not been a major market meltdown, at least in the last 50 years, without a positive Hindenburg on the NYSE. I track the NASDAQ. I don't have as much data that it's valid. But the key point here is the last positive was in June 21st on the NYSE, although we had a couple in August. On the NASDAQ, if you think about it, the NASDAQ was tough the last couple of weeks up to this week, but no Hindi on the horizon. Market tone, we're looking at this third major column, the Woody indicator, and we see a couple of ones popping green, but for the most part, it's yellow, so still choppy, but choppy with a leaning towards bullish. And sector strength, a number of sectors. This looks like healthcare. The fourth one in is energy. Sixth one is probably utilities. It's been strong forever. Actually, utilities is not there. This one that's been strong forever is healthcare, and then this one, second to the last one, is I think technology. So we did have some improvement in sector strength. That's bullish. The canaries, last week I looked at this spinning candle here and said maybe that's going to be a bottom and we'll move up this week. Well, we sort of repeated it on Monday and we had our move up on Tuesday. So we got the reversal that the charts predicted. Know your news. This week, what's in red? International trade in goods could be interesting with all the tariff discussions that we're living through. GDP, that should be market moving on Wednesday at 8:30. The energy report always comes out at 10:30 on Wednesday. There's another report that comes out Tuesday night. The Wednesday one seems to be the one that people pay attention to. Jobless claims on Thursday. And since we're fortunate to have the last day of the month be a Friday, that means we have another week before we get the monthly unemployment report. But there is a PMI, consumer sentiment. So I would say medium to low weight news compared to some of the other recent things, weeks we had last week with Jackson Hole and the Fed head speak. EPS dates. We're winding down, which is kind of a joke because ultimately you wind down and you start all over again. These are some of the stocks that we'll be reporting this week. Best Buy and Tiffany before the open on Tuesday, BJ's Wholesale Warehouse. Those are big. Lynette's been clobbered. I used to play that stock, not in a while. Box actually made my interesting list, but it's before earnings, so I'd probably pass on it. Dick's, American Eagle, Express. American Eagle sold off on Friday, probably in sympathy with Urban Outfitters. At Home has been a mover. Salesforce.com, one of those high PE stocks. On Thursday, one of my favorite for years, Retail, Burlington Coat Factory, Abercrombie & Fitch, which I do have a position in, Signet Jewelers. So Ambarella, some very widely held stocks. So even though it's not a big week of earnings, there are still a significant number. And as I once quoted, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. My thoughts, well, as I showed you, several indices end of the week at or near all-time highs, pretty much everything except for the Dow. Falling or weak dollar, weak interest rates, despite Fed head and other news. And then you think about this world we live in. North Korea talks appear to be failing. They canceled Pompeo's trip. The lawyer's attorney pointed a finger at him and named him as an accomplice, or certainly inferred he was an accomplice in some potential campaign financial fraud. And if you believe the liberal press that an impeachment is imminent, I watched the futures trade down about 0.75% and open up the market the next day higher. Chinese talks ended without any noise and suggesting that there hadn't been much movement. Of course, the Trumpster said he didn't expect much. And then a friend of President Trump, I think he publishes a National Enquirer, is going to bear all about Trump to prosecutors. And apparently, using his money, Trump's money, who knows? You could certainly say, who cares? He's going to bear all about some of the things that he's paid off. So we're getting into a more favorable seasonality pattern here. August is usually a tough month. But if we're going to see any strength, it might be the week running into the Labor Day holiday. And, I'm starting to wonder when we're going to get our melt up so that we can get deflated in October. Now, before I go, let me show one thing. Then I'm going to come back to that chart. And let's open up. What was I going to show you? Oh, yeah. Just wanted to review. This is the yield curve for flattening. So let me just show you what we've got on top, everywhere from 3-month treasuries to 30-year treasury yields in different colors, plotted over time, going back to 1998. Down here, we have in pink, this is the S&P 500, and in blue, we have the yield curve, the 10-year, 2-year treasury yield curve. Now, everybody's talking about the flattening, and clearly it continued to get flatter this week. You can see go in the lower right-hand corner there as I light it up. But I also want to point out, as I've said, over the last 6 months, CNBC is scaring us, but why is it that when the yield curve flattens, the market keeps going up until the Fed starts tightening? Okay, maybe that's meaningful. As the yield curve flattens, the market keeps going up. So just because we're getting flat doesn't say to me the market's going to collapse in 3 days. Now, one of the stocks that I've liked a lot over the years and have been in and out of it, and a store that I can't say that I shop at, but my daughter certainly liked it, and that's ULTA. So let's just take a look at ULTA for a second. Let me open up my traditional view. And ULTA is kind of boring to me here. It's boring in that it's kind of in choppy land, and really you could, why not? I could put a box on it, probably start somewhere up here and down to maybe here. And going back quite some time, in fact, this whole chart, it's been living in this box. Now, you could also argue that maybe the box is more closer to where the 200-day moving average is. So we're in the upper part of the larger box. We are right below the 50-day moving average, which isn't that good as far as I'm concerned. We've got really strong group strength. We're in a squeeze. Now let's go look at this in TradeStation for a second. Where I put it in here, not to put it right here. So far I'd say, oh, great. I really am subscribed to this, but I'm not going to worry about it. Point I want to make here is it's pulled back on the weekly and on the daily down to some trend line support and is moving up. It's sitting in a squeeze. So it's not negative chart pattern. To me, it's sort of a neutral chart pattern. And to me, technicals trump seasonality, but those technicals are neutral. I want to find an edge. So Edge Rater, speaking of edge, I could run an entire universe of 10,000 stocks. I can then look at 2-week, 1 month, 2 month, 3 month performance. I can run it a little differently and tell you performance by month. But what I like to do is I always like to look out a month. I run the database, and first I rank them by years positive. And then if you click on that down arrow, you can then put greater than X years positive, less than Y years positive. So greater than 8 on the up, less than 3 on the down. And I come up with what I have over here. So I'm only really caring about this 1 month performance. And then what I do, and if Chris ever watched this, I'd love it if he would do it. I added a column of percent positivity, and then I give them a score, which is the movement times how often it's positive, and I get a score. Now, a stock that has a 20% move, but is only right half the time, is not helpful to me. A stock that has a 10% return, that 90% of the time it's accurate, that's very important to me. So why not take the movement and then the likelihood of being accurate and combine them? So the number one stock looked like Acacia Research. Number two was Madrigal Pharmaceuticals, up 23%, 9 out of 11 years. The one I got interested in was ULTA. ULTA was up 9 of the last 10 years over the next 30 days for a 12% return. Now, I use other tools. So I said, all right, I like it in HGSI. I like it in EdgeRater. What about in a seasonality program? So here I'm looking at ULTA and Magenta Trader. Once was formerly known as Magenta Trader, Seasonality Trader. And let me show you what the different components here. Obviously, candlesticks, this is the performance of ULTA since March, and I could change all the parameters there. This is a linear regression channel based upon the computer's work. So going back to this prior swing high, which would suggest it's in a downtrend. And on an intermediate basis, it is in a downtrend. The yellow line represents the predicted price pattern over a 10-year period of time. The green predicted pattern over a 5-year period of time. I like to see them behaving similar, and you can certainly see the green and yellow seem to track themselves. Now, in some ways, it's not tracking perfectly as the stock price got higher than the predictions, but in reality, it's not exact, and they call for a market to trade up, trade down at this time. And what I see here is the future, and I see, based upon available data in the database, what to expect over, using a 5-year data pattern in green or a 10-year in yellow. And then the computer is automatically looking at the short term and telling me we are in the midst of a very, very bullish time. If I look over here, it tells me in August 13th, September 21st, the market's been up 7 out of 10 times for an average return of 17%. And on the years that it was down, the average was only 2.3%. That's certainly favorable. Now, one thing I learned is I'm going to actually not look at that swing high. I'm going to go back to this swing low. And I'm going to make a different pattern and see what happens. So all I'm doing now is concentrating on the current swing. So we have a tightening channel growing at 26.9%. Upcycle growth, 415% on this LRC. That's pretty cool. I see we're in the midst of a very strong seasonal time of year. And although we might pull back within the channel, I have a high likelihood that this is going to rise over the next couple of weeks. All right. So I would be putting ULTA down on my watch list. And of course, I offer you no guarantees. And I'm just doing this for education purposes so you can see how I look at things. Now, go back into TradeStation. One question might be, I don't know why those things aren't working today, but it is what it is. come down here, and I could just put blank row. And I'm going to put ULTA, ULTA. And one of the things that I like about my trade station set here is I can scoot over here and I can see eventually earnings are in 4 days, Thursday at 4 p.m. I might be willing to play earnings roulette with this. I'll come back to it. So let's take a look at some charts and see what I think is going to happen. Back into trade station, let's just show you the strength of the market by looking at some of the major moving averages. We'll start with row at RTY. Start with the E-minis, and I just want to point out my 5 or 6 point checklist that I look at every week on these. I just got to set up all my. All right, we're already on the E-minis, I bet. We are. So clearly an uptrend. The last, oh, you got to be kidding me. I'm not getting any of my person signals here. All right, so take a chance here. I'm going to stop it for a second and see if I can't fix this. All right, I got it working now. So I thought I had it working. Yep. So E-minis, you can see it's in a daily buy signal. That's a John Person buy signal. This came in on, all right. We done working? Okay, it came in several days ago. That red line there shows evidence of some MACD divergence forming, something that might, pretend risk. So you have a higher high. Remember, it set a new time high. And notice that the MACD barely broke the flat line. It was much higher here on the oscillator. So that might be something of concern. The dot is also, it just tells me to be careful. And between the midline, I'm in a weekly and a monthly buy. High jumps 59%. Weekly bond goes green. I see a E-mini that says I can be long the market. If I look at the NASDAQ, similar picture. It's the one that turned on Wednesday. Notice on the weekly how much negative divergence has been building up. But also notice this can go on for a long time. Right in the middle, 65% of the high jump, certainly nothing concerning, can go higher. The Dow futures, interestingly, and this will probably turn out to be a bad signal, we'll see. On Thursday, it had a sell signal pop up. It has a lot of divergence. Still on a weekly and a monthly buy, only at 48% of the high jump bar, so we'll have to see what happens there. And I don't know if they'll give us the Russell, considering that the data hasn't loaded yet. Probably not. So I look at that, and clearly, except for the YMs, and we'll see if that's gets overridden quickly, look very bullish to me. Now, I do most of my top-down in HGSI, so I would go into the designer group. I would go under market analysis groups, major markets plus, hit my warehouse view, and then I'm going to change the view here to top-down view, and the cream will come to the top. So if we look at last week, the NASDAQ certainly outperformed Russell up at the top. At least on Friday, the way that we rate this is the highest impact is Friday, second highest is the week, and the third highest is the last 3 weeks. So when I see treasuries, volatility, and the dollar at the bottom, and NASDAQ and the Russell on top, I know I made some money. Interestingly, biotech's not participating as much, certainly not big cap biotech. All right, looking at the S&P 500. By the way, if the sound isn't good, I am on the road and not in my usual setup at home. So let's go into a little cleaner chart here. First thing I want to call out is there's no Hindis that are not near the top of the high jump. We did have a kahuna on the S&P that went to 345 a week ago. S&P 500, in my opinion, for whatever it's worth, continues to look strong. The Dow Jones Industrial Average, not as strong as the others, struggling here. I would like it to see it take out that high. Maybe we'll get that on Monday. The Russell 2000, second in command here, sitting, breaking out again. And then lastly, the NASDAQ, and you can see the strength of the NASDAQ here, breaking out to a new intraday and closing high. So I'll take it for what it's worth and say that we're not without risk because of the news flow, but the market continues to look strong and wanting to go higher. Supporting a higher market would be potentially a weakening dollar. And I'm not sure if this is going to turn out to be just a tease, or is the dollar really breaking down? It's getting down into support here, 25.10 at the 50-day moving average. The weekly bond though is still green, still in an uptrend in my mind until it breaks below the 50 and perhaps even until it takes out some lower lows down here. But the dollar pulled back. Not only did the dollar pull back, the VIX pulled back into boring range, complacency. And with a weak dollar is a time to jump back into gold. Everybody knows, like I said before, I'm not a gold bug. I've been looking for a bottom and realizing that the 8-day and the 17-day moving averages have been like a wet blanket in preventing the stock to break out or this asset class to break out. And it moved up above the 17-day on Friday with a kahuna and big volume. Maybe it's time for gold, certainly something to watch for. And then silver also popped here. Now, obviously, this is tied very much to the dollar, and President Trump has been trying to talk down the Fed, so we'll see if it holds up. Industry groups, we have 174. We like to use the 2-day force to rank them. And one thing that was amazing this week is I've got 71 to the upside, and to the downside, I've only got a handful, 4. So department stores, apparel, footwear, which have been strong, tobacco and information services were the weak ones on the week. I like to buy strength, so let's just look at some of the things that were leaders. Application software, a lot of lower left, upper right patterns. A lot of them with stocks that don't make a lot of earnings, but a lot of them moving a lot this week. So here's Autodesk, old name. And you can see a lot to like on this chart. It had a Bible gap up, and that's probably the one thing not to like. It moved up perhaps too far for me. There's a Bible gap up, the weekly bond will turn green, everything green up there. You're now getting closer to the high jump, not a surprise after a move like that. Recently in a squeeze and had a kahuna. If you own it, congratulations. I'd probably be thinking about putting my stop somewhere near the bottom of the Bible gap up bar. I'm not sure I'd be chasing it if I didn't own it, and I don't own it. Viva, I could just say the same story, earnings driven, breakout, Bible gap up. You know, the funny thing is the stock has been accumulating pocket pivots over the last week prior to this. It was in a nice uptrend. Kind of like Autodesk. If you own it, congratulations. If not, a little bit too late. The gaming stocks all have a pattern that's kind of low in their path. You know, this one's sitting right above the 200. It did have a kahuna and a pocket pivot. Maybe something's going on with these groups. You can get them low. To be honest, I've never made money on the gaming, so I'm not going to go chasing. Salesforce.com broke out some on Friday. Earnings are the 29th. I think this is one of those companies where fundamentals truly do not matter. And if their earnings are anywhere decent or a little beat, the stock will take off like others similar to it. So that's one to look at. It's an expensive stock. Don't know this 7 stars cloud. I might look into it, but this is not my favorite pattern when a stock had no volume back here. Down here, 445,800. There's more volume than I thought. 500,000. All of a sudden, they had a 21 million share day, 2 million, and on Friday, another big day, which was 15 million. This reminds me of Plug, and this pattern here coming right back. That might be one to look at or at least track. Adobe moving up off of its moving averages. Earnings come out in September. Pocket pivots, recent kahuna coming out of a squeeze. That looks interesting. Intuit, uptrend, sideways, breaking out. 2 kahunas in a row off the 50. Just a super expensive stock. Volatile earnings here based upon tax time and others. But that one, I love the pullback to the 50 and the breakout. So here we are, the first group of the day, and there are more than a handful of stocks that look interesting. Second group down, other consumer products. This is just based upon a little bit of marijuana action. And this is, if you own it, great. I'm not chasing after it. Canopy Growth got a big investment and took off. No Cronus Group at all. Back, third group down is semiconductor devices. Nice to see them back in a leadership component. I got lucky. I guess it's probably in communication. I'll talk about Aristonet later. AMD has quietly become a stock, and you can see with a relative strength rank of 99, EPS rank of 99. Went into a 45-degree angle. Now it looks like it's in a climax run, blow off top. I wouldn't be chasing it, but what a beautiful move here it is made. Congrats to those that are owners. NVIDIA, earnings are out. Earnings were surprised to the upside. Their new graphics chips are coming. They're supposed to be dynamite. Looks like it's ready to break out again. Micron Technology, I remember just 4 to 6 months ago, they were giving $100 targets. And then with some of the Chinese tariffs, it's come down hard. I don't know if that's been resolved, but when you can buy it's not a blue chip, but it's certainly a leader in its category, sitting on the 200-day moving average with earnings per share growth 5 to 12 times the PE. I think more often than not, unless there's something fraudulent going on in the company, you're going to make money on that trade. I think you can make that trade here. Intel's down in its pattern too low for me. So those were the ones that I like there. Analog devices, that may be okay. But we're finding lots of stocks that are potential viable. Infrastructure software. I'm never good at finding stocks and buying them where they lose money and have expensive price tags. But here was a beautiful pattern, a kahuna on Friday, pocket pivot on Thursday with a mobile breakout, Bible gap up. This is one that looks like it looks interesting, but the BDIs go up to here, and I see it's at the high jump. So we missed it. If you got it, congrats. ServiceNow, kind of a beautiful pattern, uptrend, sideways, breaking out with a pocket pivot, mobile breakout from a squeeze, and a kahuna. Off of the 50, my favorite pattern, not a cheap stock. Palo Alto Networks broke out, not yet on earnings. It's funny, it was a stock to short here, and then it's just been on a steady run back up. And yes, I shorted it using my spread, which includes a protective long call when I do a short trade, synthetic to the short side. I actually closed out the put trade at a small gain, made more money on the rebound back up, but sometimes you just get lucky. Microsoft, not yet broken out. FireEye on news breaking above its moving averages with a Bible gap up, a couple of kahunas. Knowing FireEye, somebody probably put out a rumor about it being acquired. Proof point, I don't like as much. It's below the 50, breaking above it, but a mobile breakup from the squeeze, moving above the 50. Pocket pivot kahuna, the group strength pegged at the highest it can be. Obviously, something's good about this group. Number 5 is biotech. Now, the problem with biotech is you don't see the big names up here until you get down to 8, 10 or so. I don't think biotech can lead unless Amgen, Gilead, Celgene, Biogen, iTech, some of those companies move up to the top. But instead, we've got Tiny Geron and Portola Pharma making. Geron, telomerase, aging, cancer, stem cells. This is a company that's been around a while, been quiet. Something happened on Friday. Something happened back here in March, too, so be aware. So do your homework, but a Bible gap up, mobile breakout, kahuna, everything turning green up here, probably some royalties coming in, 100% earnings per share growth, but maybe something's happening here. I could always right click, go down to more info from web, and hit FinViz and get an idea of what the news may have been. Earnings came out the first. Well, it's worth taking a read at it. That looks interesting to me, made my watch list. Portola Pharma, too low in a downtrend. There's the index. Viking looks interesting as well. Don't know anything about it. Would have to do the research. 2 kahunas last week, Wednesday and Thursday, mobile breakup from the squeeze. Everything turning green here. PSA reversal. I like the pattern on Viking, but I need to do more research on it, or meaning you need to do your research on it. Exploration and production. Oil prices bounced this week. These had been leaders. These are some that came to the top. Concho, it doesn't look very exciting to me. ConocoPhillips looks a little bit better, moving up off the 50 in a squeeze. Pays a teeny dividend 1.6. Don't know anything about California Resource Group. I like WPX, sideways move, broke out on Friday, has some earnings coming in, small stock. Didn't really love most of the other chart patterns that I looked at. Oasis looks interesting. Now, if you really want to buy a big company, we'll look at those in 1 second. Well, when we looked at Conoco, I counted on a 1.6%. But if you bought British Petroleum, whoops, not P, that would be Pandora probably. If you bought British Petroleum, similar pattern, 5.6%. If you bought Chevron, now I can't remember what Chevron's code is. Bottom line is there are other probably integrated energy companies that might be at a better time to buy right now. All right, go back to exploration production. All right. They will go with oil prices. They'll also benefit from a falling dollar. Communication equipment, Arista Network, probably my luckiest trade ever. I had wanted to get back into it, and then there was some volume coming into it on Thursday. I decided to take a trade. This is a stock, put it on weekly for a second. Big uptrend, massive uptrend. It's been going sideways for 6 months, so basing. Looked like it was breaking out, and this is even before Friday. So let's just. All right, so let's just look at this. Is this not a good looking chart? Uptrend sideways. Looks like it's breaking out of a squeeze. And so I bought it based upon this chart. I bought it at 285. So I was not anywhere close to the low of the day. So I bought it in here range. and I bought long 285 calls, short 285 puts, and then I bought a protective put down here on the 200-day moving average. So what happened on Friday? And notice also, well, hold on a second. Here comes Friday. For a million shares, Bible gap up out of a squeeze. I think the stock goes higher, but it's got to take a few days to digest what happened from being added to the S&P 500. Other stocks group, Apple earnings come out not to November, so you got some time on this. A little bit of a flag here. It's extended. It's near the top of the 200. I'm not sure I'll be putting fresh capital there in position. Cisco had good earnings, broke out. All right. And I typically will go through the top 10 of these groups. We'll look at a couple more e-commerce. Wanted to call out Netflix here. Now I'm going to do what a lawyer never does, which is ask a question that I don't already know in advance what the answer is. Hopefully I'm not going to have an unhappy computer. That's been known to happen when I ad lib on these things. Back. There we go. Let's look at Netflix seasonality. So earnings are not to here. So we are in a flat time of earnings. 6 out of 10 positive, negative rather, average down year 8.4%, average up year 5%. There's no clue here from seasonality. The issue with Netflix was, when is it going to be oversold enough this time to get back in? So let's just take a look at the chart. This was the day that I got excited. You had a kahuna, a bullish engulfing panel, and I got back into it on Tuesday, which is back here, but after it had a big move off of its lows. You had multiple mobile breakouts coming out of a squeeze, pocket pivots and kahunas. It does have great earnings. Obviously, a high profile blow up from a high up here on this day, which was 423, all the way down to the reversal calendar day of 327. So really, 100-point differential. And it looks like for the short term, it's turned around, but still going to, my guess is it will move up to that 50-day and be at risk of stalling. MELI, just like a South American eBay cup, handle, breakout, failed, trying to break out again, mobile breakout from a squeeze, pocket pivot and kahuna. Amazon remains my biggest holding. Kind of have to figure out what to do with it. I continue to write calls against my position that are way out of the money. Sometimes I have to buy them back, but it means the stock went up too. I don't have any puts on it right now. I do have some, as I said, I'm still calls against my position. Earnings per share growth compared to the PE multiple tells me that unless we see a depression, recession with a contraction in multiples, or it has a big miss, which I don't see happening. I think this thing's going to continue to go higher as its earnings per share are outstrapping its multiple. Stitch Fix, I don't know this. It's an IPO broken out to an all-time high. Could have bought it a couple bucks ago. That one looks interesting. Etsy, don't like the fundamentals, but they changed their business model, and that caused this gap here. It went sideways to the moving average is caught up and running again. Not sure I'd tell you to chase this from here, but if you own it, enjoy the ride with me. All right, that's the index group. Back. Precious metals. Now, too early for me to say that they've changed, but if I wanted to go out and buy something besides an ETF, I might want to play this one. In the bad gold market, it's been moving off of its lows from the January, February timeframe. Just pulled back to its moving averages, had a big day Friday with a kahuna and a mobile breakout. The kahunas, the bongos are green. Big earnings coming into the stock. I think this one looks interesting. The market, it's a cheap 1.6 market cap, so it's a small cap gold producer, but this one had one of the more interesting charts. The others look like the gold chart. It's hard to get real excited about this stock pattern. And that's what they all look like. Eventually, a bottom's going to happen. And then number 10, medical equipment index. There's my favorite stock of the year. That doesn't even make it into this balance in Thinkorswim because it's in my Schwab account. Align Technology. Hard for me to buy a stock. It's $368 a share. It trades at a multiple of 80 and growth at less than 20%. But I think they have in canceling the new product, the Invisalign. If you believe in the story, it's gone sideways to the 50, pocket pivots, mobile breakout from a squeeze, nowhere near the top of the high jump bar. A move above here might be a buy signal. Staying away, it's too expensive, but it's going to probably go higher. Transcentrics, another equipment stock breaking out here. Intuitive Surgical, what a tight leader. Earnings are not till October. CareDX had a beautiful breakout here with pocket pivot, kahuna mobile breakout from a squeeze. Continues to run up. And here's my stock of the year. And those that were at that George Lee meeting last year know that I said to buy it on or about April 8th, 9th. The meeting was the 8th, Saturday, Sunday, and Monday. And on Monday is where my arrowhead is here. And I've had a buy stop that filled in on Tuesday. And that's when I told people on my weekend webinar. And look what happened. Got up to 40. 6 to 40 in 4 months. I'll take that. I'm not going to go to the downside because this market still looks pretty strong. But I do put together a number of predictions to the downside as well. I don't believe that I make money in an up market, even if I have the right stocks to short. But what I put together in a super strong market, a list of 10 stocks. Well, I should have, but I guess I didn't. Let me bring that over here. Oh, I know why. Yeah, I don't know why it's not there. Let me fix that. Hold on a second. But I like to take 10 stocks that look like they might be weak to me, and then I'm just going to see how they do over the week. And if they're breaking down, I've got some shorting candidates. But if they're bouncing, that tells me something about the market as a whole. And these were some of the ones that looked interesting to me on the short side. Again, I'm not shorting things because this is a very strong market. But I like to always have a few shorts that I could go look at. And these are all stocks who look like they're getting ready to fall over or who have started. A typical one would be Equinix, which most of us are not going to go out and buy a $403 stock. It doesn't look like much here, but if this stock breaks below this 200-day moving average, it's going to drop from 424 probably, in my bet, down to the 384 range, which is 40 points. And if you're using options, that's a tremendous move. But it may also bounce off here like it did on Friday and go higher. So these are really sort of an early warning signal for me that the stocks are rolling over. And those are some. Even Jazz is a stock that has been a huge performer, but I think it's had its run, and this is what I like, the falling over. It was on my list last week, but again, not a week to short, but a pop pivot to the downside, multiple cahoons to the downside, mobile breakout from the squeeze. If this wasn't such a strong market, right now I'd be thinking about shorting it, or I would have shorted it probably below this bar or this bar when it ran up and failed at the 50-day moving average. So I'm getting tired. You're probably getting tired of listening to me. Once again, let's go to my buy watch, hit the warehouse view. Let's go into a plain scorecard, no filter. Why are you not giving me this? Oh, that's strange. Just try something real quick. Let me hit pause. All right, well, I'm gonna have to guess where I stopped recording. I think I had changed out my HGSI, so let me just review some of the stocks that are interesting to me on the buy list, and then we'll close by how I'm going to trade ULTA. And if this is repeat, I'll try and cut it out, and I apologize in advance if I screwed up. So on the designer, I have buys, I have shorting candidates. I'm not shorting. I think if I haven't said it before, on Monday, based upon what I know right now, I'm bullish. But if the market starts to roll over, these stocks I think are going to lead to the downside. And so if I see them turning early in the day, I'll expect a reversal in the market. That's why I call those there, not because I'm going to go short them. My buy watch list is this list here. I'm going to comment on a few of those and hope that I didn't, not just repeating what I did already. The first thing you're going to notice is I've got a few biotech, but most of it matches what the top-down review showed. Exploration and production, infrastructure software, application software, REITs, and semiconductors. Many of these, if we rank by raw combo, I've already showed you: Viva, Arista, Splunk. RealPage is one that I think has got a great chart pattern. It's a pattern I like to trade. And that pattern is an uptrend, sideways move, and a breakdown over a falling trend line. RealPage looks very viable. Love its growth rates, earnings per share growth rates. Earnings are out. Didn't show you ServiceNow, another the same pattern, big uptrend, sideways, and out breakout with a mobile breakout from the squeeze, pocket pivot, and a kahuna, great earnings per share growth. Continuing the same vein of patterns that I like. This is a little different pattern, but here you have a flagpole, flag, and then a breakout from the flag. So this is one where you should get a move that's maybe 60% of this prior move. Pennant flag breakout. GoDaddy, powerful uptrend, sideways breakout here, multiple kahunas in a row, great earnings per share growth. High PE, but I like that one a lot. The Hotel Properties I may have already mentioned, sitting on its 50 here, mobile breakout from a squeeze, pocket pivot kahuna. That's my pattern. I'm sticking to it. I'm trading it over and over. Look at the earnings per share coming in. It's a REIT, pays a 2.6%. A lot of similar patterns here if I was to look at them. And it's the pattern I like, Dow DuPont. This one is a weak one, but it pulled back to 61. It's now back up to 70. The reason in my watch list it broke above the 200, mobile breakout from a squeeze, pocket pivot, and kahuna. Those are some of the stocks I like to the long side. Just again, let's review ULTA and then see how I might want to trade it. So ULTA in HGSI software. And looking at Friday, opened at it opened at 240, got as high as 242.07, and it closed at 241.67. The 50-day moving average is at 243 and 60 cents, give or take. Not the best pattern, not the worst pattern. Kind of a sideways pattern. I think before I drove a box, it's middle of the box. I like the kahuna. I like the mobile breakout from the squeeze. I like the fact that it's got strong seasonality. And I like the fact that over the short term, after this gap down, it's been in a move back up. That 50 could turn out to be resistance. I don't like that, and I have some concern about that. So before I look at how I'm going to play it, I would probably give myself an alert that if this stock trades above its 50-day moving average before earnings come out, especially if it closes above that before earnings come out, I would probably take a trade in ULTA. My concern is that it may just falter at the 50, and I don't want to be in it at that point. And I'm going to want to take a trade somewhere around that 246, 245 range. So I might go into think or swim. Here's the what I'm going to think about constructing. Let's see if I can kill this. Here is ULTA. I think it's good for a 20-point move. I'm looking at the volatility. They're predicting an 18-point move. All right. I picked my 20% based upon historical seasonality. Since it expires on Thursday, or reports earnings Thursday after the market, I don't want a one-day option. So I'm going to probably go with the September monthly options. I'm going to look at something in the 240, actually, yeah, 243.60. So I might look at a 242.50 synthetic. So I'm going to look at something along the lines of this, where I'm going to buy a 242.50 at the money call and sell an at the money put, and I'm going to get paid 30 cents for taking that trade. The good news with that trade is it's got unlimited upside. The bad news is I could lose $242.50 a share. Unlikely to happen. Now, so I can sleep at night and so I protect my my margin, I'm going to look down here and get to somewhere in the 225 range and buy a protective put. So I'm going to pay $3.75, actually a bit more. Let me make that a 20. $4.05 for 2,000 options, or 20 options controlling 2,000 shares of stock, 20 times 100. And I'm going to pay $4 times, and what's it going to look like? It's going to be, max I can lose is 43,000. That's a lot of money. I have to go back, and that's because it went all the way down to 225, but you have where it stops. My maximum profit is infinite, and this is just to make pretend. But that's how I'm likely to play ULTA. Now, I won't put a trade in until Wednesday or Thursday, and it matters what the strike price is at that time. Now, before I go, I wanted to look at this real quick and just show you how I model it. Do a quick update here. Remember, as I asked before, please hit thumbs up on YouTube or liking it so that I can get more attention and maybe more people can see this. I don't do this for money, but I do like to know that people are getting something out of it, because the amount of work that it takes to prep for this far exceeds the amount of time it takes for you to watch it. This is Options Pro. Dynamic Trend puts it out. I get it. Don't do that to me. Maybe it's not. Okay. So let's look at ULTA. Come on, I got a lot of things going on that kind of gets me nervous. All right, good. I got a lot of things open. That's the problem. Okay, let me close some things down. Hello. So what we're going to do is I'm going to go into the matrix tool, the spread tool. I'm going to put in ULTA. I'm going to look for a time frame September 21st. I'm going to look at it starting 242.50. I am bullish, so I'm going to look at long stock, long call, short put, bull call, bear call spread, synthetic long. All right. So these are some of the different things that I could do. Let me just point out some of the key things. A bull call spread. I'm going to buy a call close to the money, sell a call out of the money. The most I can make is the delta between the two minus the cost of the spread. It reduces the cost of buying the call, so my maximum risk is only the price of the trade of the call, but my maximum profit's capped by the delta. And it costs me $120 to make 130. A bull put spread is I sell a put close to the money and I buy a protective put. There's about a $2.50 difference between those two. I get to keep that. So I actually make money on the trade, but my gain is tied to how much I receive for selling it. My risk is pretty unlimited. Actually, it's only, is very limited because of the protected put. Going long a call gives me unlimited upside, but it's the most expensive. It's cost me $10, which means it's got to move $10 for me to be in the money. Buying the stock, I have infinite profits, but I also have maximum potential loss. Shorting a put, again, puts money in my pocket. I carry risk there. So the maximum I can gain is the premium, but I carry maximum risk. Or I can do a synthetic stock. Let me show you what some of these look like. So if I buy the stock, this is what my P&L curve looks like. So the blue line is the price of the stock. As the stock goes up, I get profitable. As the stock goes down, I lose money. And you can see when you buy the stock, your break even is the price you paid for it. Your maximum risk is the entire investment, but your profit potential is infinity. All right, I like that. If you buy a call, it looks a little different, but some of it looks the same. Let me play around with my space here. Excuse me. So if I was to buy a call, let's compare how this looks compared to this one. Buying the call gives me much of the gains that I had by buying the stock, but I don't turn positive here, break even, until the stock moves the amount that I had to pay for premium. So it's a lower probability trade. And unlike buying the stock, I've capped my losses. That's not too bad. To control 1,000 or 100 shares, it's going to cost me $1,000. All right. What if I wanted to short a put? And what I've done on this one is I've capped my gains. I have unlimited losses, but the stock has to move away from me for me to get max loss. I get to keep $1,000, and as long as the stock doesn't fall more than the $10.55 a share, I got that much cushion before I'm at risk. But I've capped. I don't like that either. All right. What else could I do? How about a synthetic long? This is one of my favorites. Actually, let me go to the long call. We did the long call, correct? Yes. What does this look like? Yes. This looks a lot like buying the stock. The difference is to buy the stock and control 100 shares, I had to pay $24,167, infinite profits. All I could lose is $24,167. If I do a synthetic, I control one option, which is my 100 shares. It's going to cost me negative 30 cents, which means I'm going to get a credit for $30. My maximum profits are infinite, and my maximum risk is the same as if I own the stock. Now, let's say that I like that trade, which I do. So let's say that I'm going to edit the spread. And I'm going to add an option leg. I'm going to buy a 225 protective put. Now, that's going to change the economics. But now, unlike owning the stock, I've got a built-in maximum loss. So even if it gaps down, that's the most I could lose. I have a huge upside, and it's costing me $405, $4 a share, versus $241. I've got the same upside, and I've capped my downside. Now, I like that trade. I used to call it the chicken shit synthetic because I was chicken, and now I just call it the Jeffrey synthetic. What does that trade look like? Think about it. What did I just create at a $4 debit? And yes, I'm showing you while I do it. I created a synthetic call. Here's a call. So on the call, I had to pay $1,025 to control 100 shares. On the synthetic call, I got in for $405. On the long call, because I put in $10, it's got to move to $252.75 to break even. On my synthetic call, it has to move to $246.55 in my odds. My maximum risk is $1,025. Over here it's $21.55. So I'm accepting a little bit more risk for less money going in. So this is what the trade will look like on ULTA, but I don't know what the strike price is until I get to Thursday. On that note, I'm going to say goodnight. Thank you all, and I hope I didn't screw it up totally at the 1 minute mark. Good night, everybody.